Hello everyone, PS from PS Invest Plays here today. I have 10 stocks that are at the cusp of appreciating to a point where you can gain 30 to 50% returns by the end of 2021. There is an ETF that if you had invested $500 every month for the last 6 years, it would have given you 600% profits. What does the stimulus mean for the stock market? I have a stock market prediction for the end of 2021. The topics that we are discussing today, when I started editing them in one video, it was becoming a very long session. I have divided this into several parts. We'll name all the videos as individual parts so that it's easier for you to keep track. Also, I'll create a playlist and add clear descriptions on which part to watch for what component. So stick around. I think you'll like what I have in store for you today. Alright friends, so far we have covered 9 stocks. Now, let's look at one stock that is not part of the financial industry, an airline stock, Southwest Airlines, ticker symbol LOVE. We have American Airlines, Delta, United. Out of all those, I think Southwest Airlines would be the first to recover. And why do I think that is the case? With the reopenings, Southwest Airlines will recover because they predominantly focus on domestic travel operations. Now, domestic meaning in US, Canada, Brazil, very less international exposure and extremely high domestic travel exposure. And with the reopenings, I think domestic travel is going to pick up more than international travel. They have extremely strong balance sheet. The stimulus package should give it a boost. People would want to travel more with the reopenings. And stock price has partially recovered, but it is still undervalued. I think on the lower side, the stock should appreciate by 30 to 40%, but on the higher side, I see the stock going up to at least 50 to 60%. Now, this is a leveraged ETF, SOXL, Direction, sorry for butchering the word here, D, Daily Semiconductor Bull, 3x shares. The way I like to invest in ETFs is dollar cost average. Look for ETFs which have given consistent return and growth. They have not had any reverse splits. They are technology focused, hyper growth. And what is my risk versus reward ratio? Now, investing in leverage ETF funds is very risky. You have to understand that before you invest. You will expect sharp drops, but at the same time, you should also expect sharp inclines, as we can see in the chart. When I'm reviewing an ETF, I definitely look at the past performance to gauge what kind of returns can I expect in the future. I need minimum 3 years of data to analyze before I can make up my mind whether I want to invest in that ETF or not. Now, as we can look in the chart, if you had invested in the last 6 years, a little over 6 years, 75 months, $500 every month, that resulted in $37,500 invested amount. Your value today would be $265,406, which is a total profit of $228,000. In percent terms, you're looking at a profit of 610%. Wow, isn't that incredible? Now, before you invest in this ETF, you also have to look at the risk. This ETF will give you good returns if you have patience. As you can see, it dropped because of the pandemic drastically. But then it recovered, and it recovered extremely well. So here we go. This is our ETF. If you had invested $37,500 in total for the last 6 years, $500 every month, your profit would be 610%, approximately 610%. All right, so those were my top 10 stock picks and the ETF. Let's talk about the stimulus. With the recent stimulus passing, where people were given $600 checks, they are also talking about introducing another stimulus package where people would receive $2,000. Now, how soon can we expect that? That is up in the air with the administration changing, with the new president coming in the next week, which is the January 4th week. There are some elections that could decide the majority power in the Senate. Based on that, I would say expect a stimulus, the next stimulus, passed somewhere around February. I always advise looking at the forest and not at the trees. What does that mean? Look long term, not short term. I think 12 months to 18 months, you can expect the S&P 500 to be around 4,400. And if there are more stimuluses passed, then that price goes up. But at least for the next 12 to 18 months, I think the S&P 500 will be trading around 4,400, which is approximately 20% increase from today's closing. Now, very short term, which is around 3 to 6 months, I would keep dollar cost averaging into the stocks that we just spoke about. In my previous video, I also spoke about another ETF, and that would have given you over 400% returns. Check out that video. Also, in the short term, you could look at stocks like NIO or XPeng or Plug Power or Sun Power. These are extremely good stocks, and with the Biden administration focusing on clean energy, these stocks should do extremely well. What about Tesla? I think Tesla is a good stock to own. The real gains that you could have made is out now. You could expect this stock to hover around the price range where it is now, which is 650. There might be some pullbacks, but not a lot. And this stock, I see by the end of 2021, if they deliver on what they have promised, around the 750 mark. I'm bullish on Tesla. I own Tesla. Full disclosure, I would dollar cost average in Tesla now. But NIO, I would buy below 45, 46 price range. Plug Power, SBE, Sun Power, they are extremely good stocks to own for the short term. I don't know about these stocks for longer term. They would be good to hold. I haven't done that analysis, but for short term, I'm extremely confident that they are good to hold. All right, this concludes part 3 of our series. Well, that's it for today. Thank you for watching. If you like this video, like, subscribe, and share this video with your friends and family. This helps me grow the channel and bring out this content out to you. Thank you for watching. See ya. Bye-bye.